Comment before we go to our next question? Mr. Marchant from Texas is recognized for 5 minutes.
Thank you, Mr. Chairman. Before we go any further, I'd kind of like to clear up an earlier discussion. And make it clear, I don't see anywhere in this draft that it's contemplating a financial transactions tax. Do any of the panelists see any suggestion of that in this draft?
No.
Because I can tell you back in my district, this is I get lots of cards and letters on the financial transactions tax. And I want to make sure that it's clear that this draft does not involve that. My first question is, many commentators and stakeholders urge the committee to adopt a territorial system with no expense disallowance. The discussion draft does not disallow expenses. Rather, it exempts 95% of foreign dividends using the 5% as a proxy for expenses incurred in the U.S. to create foreign source income. Do you agree that this is the best method to address the U.S. expenses in a territorial system? And we'll just go down the line in the panel, please.
Yes. Thank you, Mr. Marchant. The short answer is yes, I agree. I think that the I think that the amount of expenses that should be disallowed, well, I mean, it's a theoretical matter. You should disallow expenses that are related to exempt income. But I think from a practical standpoint, you're talking about a very small amount of expenses, if any, that would fall in that category. So I think the approach taken by the discussion draft, I think, is appropriate in terms of its narrowness, in terms of expense disallowance. In terms of whether it's 95 or 96 or some other number, I think to a certain extent that's in part a revenue issue, and in part it's sort of a compromise between resolving disputes between people who think there should be more or less. What I do think, though, is that you should not have some very broad set of expense allocation rules like we have currently that you would apply to this type of income. I think one is too broad, and I think it's too complicated.
Thank you. Mr.
Yes, Mr. Marchant, I would agree with Mr. Harrington that I think the approach of taking a small percentage of the income and making it taxable is a reasonable approach, as opposed to a very detailed method of allocating specific expenses, and it is consistent with international norms. Whether it's 95% is the right percentage can be debated, but I think that approach is much better than the specific allocation approach.
Thank you.
I would agree that that the approach makes a lot of sense. It avoids a lot of the complexity that would go with expense allocation and disallowance. I would also note that in addition to the 5% so-called haircut on the distribution, there also is a set of thin capitalization rules applied, and I'd say that the haircut taken together with the thin cap rules really direct two different responses to the concerns that might lead people to say that you need to allocate expenses and disallow them. So I think the discussion draft really represents a serious effort at dealing with that issue.
I take a little bit different approach. Although I do agree with the bill. I don't see the 5% haircut, as we've been calling it, the 95% deduction, rather than 100, as being a substitute for what otherwise would have been the proper disallowance of expenses. Because I don't think, with respect to R&D and G&A, as I mentioned in my oral statement, there should be any disallowance, no matter what the exemption is. And with respect to interest, the thin capitalization rule provides a framework for dealing with the disallowance of interest expense, and so therefore you don't need the haircut with respect to that expense either. So it's fine to have the 95% rather than 100 if from a revenue point of view that's what you need, but I wouldn't say you need it because we otherwise would have expenses that we would be disallowing.
I generally agree with the panel, but I think we need to be very careful. Remember, we're exempting foreign income. If we do not properly allocate expense or have a proxy for that allocation, that means we're not only exempting foreign income entirely from tax, that we're subsidizing foreign income. So we're driving the effective rate of tax below zero. So we want to be careful about that. Having said that, it is extremely complicated to get these rules to work, and they need to be judged in conjunction with the thin capitalization rules. So it's the whole entire package has to be judged, and not just this one feature alone.
The gentleman from Texas yield?
He has about 2 seconds.
It'll be less than 10 seconds, because you mentioned about the no transaction tax anywhere in the draft. Can you tell me where in the chairman's proposal the table is showing his proposal to be revenue neutral? I brought it up because I think we have to demonstrate how we can get to that 25%.
I yield my time back, Mr. Chairman.
Thank you, Mr. Marchant. The gentleman from Pennsylvania, Mr. Gerlach, is recognized for 5 minutes.